day, grade 11 learners, and welcome to today's accounting lesson. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center, and it is being broadcasted by Pakama Research and Development Center. In today's lesson, it is going to be a very interesting lesson. I want you to make sure that you have your calculator, you have your pen, your pencil, all that you need for accounting. Let me take you through what we are going to be talking about today. Another thing that I want to point out to you is I'm going to have a colleague who's going to come and also present in today's lesson. So I want you to continue being tuned in. After my presentation, there is another colleague that is going to come in and continue with the presentation, Mr. Peter. In today's lesson, here are the objectives that we intend to cover. Number one, I am going to be talking about inventory systems. Inventory systems. I'm going to touch on your perpetual as well as the periodic inventory system. I am also going to talk on inventory calculations. So if you have a problem with calculating inventory amounts, today is your day. I want you to tell your friends that the lesson is on. I am also going to touch on internal controls. We're going to deal with internal controls that pertain to inventory. All right. Now, the biggest question that then comes is, what are inventory systems? As I said earlier on, we have the periodic and the perpetual inventory system. Now, these are systems that are used to track the quantity of goods on hand. In other words, if a business is doing its daily business, that is buying and selling, they need to keep track of their goods on hand. That is very important. And there are two methods that they will use to track their goods on hand. The first one is the perpetual inventory system. Now, with the perpetual inventory system, the tracking of inventory balances and the cost of sales is on a continuous basis. This is very important. In other words, with the perpetual inventory system, we track our inventory continuously. In other texts, you'd find they call it the continuous inventory system. But here we're going to talk about it as the perpetual inventory system. And it tracks our inventory balances and the cost of sales on a continuous basis. The next one is what we call the periodic system. Now, the periodic inventory system mainly relies upon a physical count of the inventory, that is to determine the number of units on hand and the cost of goods sold. So with your periodic, you have to do a physical stock count. A physical stock count, that means you literally go to your shop, you count each and every item individually. That is a physical stock count. That is for you now to determine the number of units on hand as well as the cost of goods sold. Boys and girls, I want us now to really differentiate these two systems. Okay? What are the differences between your perpetual and your periodic inventory systems? Number one, with the perpetual inventory system, remember the perpetual, this is the continuous now, okay? The movement of stock, it is recorded on an ongoing, very important here, that the movement of stock, it is recorded on an ongoing or continuous basis, okay? And then the exact quantities and types of stock items on hand are shown by the system at any point in time. So in other words, when we use the perpetual inventory system, we can know our stock items on hand at any point in time. That is, one main aspect of the perpetual inventory system. Another point that, boys and girls, you need to know is that businesses that are selling one type of commodity, like your furniture, your cars, or computers, will make use of the perpetual stock system. And then lastly, the physical stock taking, all right, is conducted to verify the stock on hand. So with your perpetual inventory system, we also do a physical stock count, but that is to verify the stock on hand. I want us now to move on to our periodic inventory system. I want us to go to the periodic inventory system. Now, with the periodic inventory system, there is no continuous recording of the movement of stock, because remember, this is periodic. All right, so there is no continuous recording on the movement of trading stock, and the value of stock on hand cannot be worked out during the financial year, unlike the perpetual inventory system. With the periodic inventory system, my second point is it is used by businesses that sell large quantities of trading stock, but normally these are of low value. Most of them are the supermarkets. And then the next point that is very important is that the value of stock on hand, at the end of the financial year is calculated by conducting a physical stock taking here now. So you need to do a physical stock taking at the end of the financial year for you to determine the value of inventory at the end of the financial year. All right. I want you to come with me as we now look at the accounts that are used in recording, because you understand in accounting, we're more concerned about the recording of transactions. Okay, so what accounts are involved with the perpetual as well as the periodic inventory system? Which accounts are these ones? With the perpetual inventory system, you will find that as I continue in today's lesson, I am going to be referring so much to the trading stock account. With the perpetual inventory system, I'm going to be dwelling much on the trading stock account. But with the periodic inventory system, I'm going to be dwelling so much on what we call the purchases account. So we have two accounts here. This is what I want you to do. Whenever you think perpetual, think trading stock. Whenever you think periodic inventory system, think purchases account. Okay? Let's do it again. Whenever you think perpetual inventory system, think trading stock. Whenever you think periodic inventory system, yes, please think of your purchases account. Let us now see the accounts that are affected by both the perpetual as well as the periodic inventory system. Remember, there has to be accounts that will be affected. Now, let's look at one transaction, for instance, when we buy stock. Stock purchases are recorded, okay, when we are using the periodic inventory system. When we do stock purchases, these are recorded in what we call a purchases account. All right? And remember that your purchases account is an expense account. So, when we are using the periodic inventory system, stock purchases are recorded in a purchases account, which is an expense account. And on which side of the account you record it? You debit it in the purchases account. You debit it in the purchases account. But with the perpetual now, with the perpetual inventory system, we then do not have a purchases account, because remember what I told you earlier on. Whenever you think perpetual, think what? Yes, trading stock account. So, with your perpetual inventory system, when stock is purchased, the amounts are recorded in a trading stock account. And your trading stock account, I know you know this one now, that your trading stock account is an asset account. So, to summarize this, with your perpetual inventory system, when you purchase stock, you record it in your trading stock account by debiting in the trading stock account. You debit the trading stock account. I want us to come to the second aspect. Carriages on purchases. Customs duty. When we buy stock, you have to understand that the goods have to be delivered to our premises. And at times we have to pay customs duty if the goods are being imported. Now, how do we record those amounts? And then now you would find that the carriages on purchases as well as customs duty will be recorded now and will be recorded as an amount that goes into the carriage on purchases. Carriage on purchases or the customs duty account. I want you to follow this, very important. When you use the periodic inventory system and there is carriage on purchases, you will take the amount to your carriage on purchases, and if it is customs duty, you also take it to the customs duty account. Okay? In other words, you will go and have the expense account created, as you see here, that you will debit your carriage expense. But with the perpetual inventory system now, when there is carriage on purchases, that amount is recorded now in the trading stock account. Unlike the periodic, in the periodic inventory system, you create an expense account. But with the perpetual inventory system, you go and you debit in your trading stock account, which therefore increases the value of your trading stock. All right, so these are the accounts that are then affected. Okay, I want us to go to more accounts that do affect the periodic and the perpetual. Let's take, for instance, goods that have been returned, returns on stock, okay, that has been purchased. Now, these returns are credited in the purchases account. When goods are being returned, we credit in the purchases account. All right? But this is not the same with the perpetual inventory system. With the perpetual inventory system, when there are returns on stock, all right, these amounts are credited to your trading stock account. These are credited to your trading stock account. Let's talk about donations. Donations, we have donated goods, maybe to an orphanage. How do we record such donations when we use the periodic inventory system? When we use the periodic inventory system and their donations, such amounts are credited in the purchases account. All right? So remember, the key aspect in the periodic inventory system is your purchases account. But if there are donations, and we are now using the perpetual inventory system, how then do we record them? You will find that such donations are then credited to the trading stock account. Very important, very important. I want to talk lastly on drawings. And drawings, all right? These are goods that are taken by the owner for personal use. Now, if the goods are taken, we're talking drawings, and the business is using the periodic inventory system, these goods are credited, very important, credited in the purchases account. Okay? Your drawings will be credited in the purchases account. But when you then come to the perpetual inventory system, it becomes different in this case. In the perpetual inventory system, drawings are then credited, but then in your trading stock account. All right. Dear learners, I want us to look at the advantages and the disadvantages of these inventory systems. You may be wondering, which method should I use? And why should I use a particular method and not the other method? All right. With the periodic inventory system, already, the first advantage is that it is cost effective. Very, very key. The periodic inventory system is cost effective as they use equipment which is not expensive, okay? The periodic inventory system, it is not an expensive system. So its advantage is that it is not expensive. And then the next point on my periodic inventory system is that the calculation of cost of sales is not done on a very much continuous basis. And then when I'm still continuing on my periodic inventory system, you would then find that the other advantage is that the system is suitable for businesses where it is difficult to determine the cost price for individual items. And then let me quickly go on to my disadvantages. I want to talk about my disadvantages. The first disadvantage is that control of stock is not very effective. The control of stock is not very effective. And then my point number 2 is that theft of stock is also not quickly detected. All right? Theft of stock is not quickly detected. Why? Because stock take is only done at the end of the financial period. Therefore, stock leakages or theft cannot easily be determined. And then trading stock deficits is not also completed. The business will forfeit the reduction of taxable income. I want us to come to the perpetual inventory system. The perpetual inventory system. The first point is that the business can verify physical stock at any time. This is very important, and this becomes key in your perpetual inventory system. The first advantage is that the business can verify physical stock at any given time. The next point is that businesses can prepare their interim accounts. Let's go on to the third point. The third point is that any discrepancies, errors, or shrinkages in stock are discovered and action can be taken, unlike when you have to wait until the end of the financial period. But with the perpetual inventory system, you can quickly identify any discrepancies, errors, or shrinkages. I want us to go to the next point, dear learners. There will be regular updates in stock to help avoiding deterioration or a decline in quality. All right? So the moment there's regular updates, you do away with outdated stock. You are able to update your stock because there is regular or continuous check of your stock. And then stock can be replenished or replaced timelessly. it is very important in business that you keep adequate stock levels so that you can meet the demand of your customers. I want us to come now to the disadvantages of the perpetual inventory system. The first point that I want to bring to you today is that the system is complicated, all right, and it requires more accounting entries, all right. So this is one disadvantage of using the perpetual inventory system. And then the second point is that it is an expensive system to run. So it is capital intensive. It requires a huge capital outlay. It is an expensive system to implement. Dear learners, I want us to quickly now come to the accounting entries for the periodic and the perpetual. Okay, so I'm going to do this comparing both the perpetual and the periodic stock system. All right, let's go. Number one, here's my number one. Number one is saying bought merchandise for cash. Bought merchandise for cash. When we use the perpetual inventory system, dear learners, when you have bought merchandise for cash, remember now, double entry. Which account are you going to debit? Remember, I told you, whenever it is the perpetual, think trading stock. All right? So you are going to come and you are going to debit your trading stock account. And then, because this was a cash purchase, you will then credit your bank account. You credit your bank account. And in which journal would we do this? It would definitely be in the CPJ. Now, how will it affect now our assets, owner's equity, and liabilities? The moment we debit trading stock, the moment we debit trading stock here, we understand that trading stock is an asset. That means our assets are going to increase. So you're going to have a plus on your assets. And the moment we credit our bank, this is with the assumption that bank is favorable in this regard. And when bank is favorable and you have credited bank, therefore your assets will decrease and you have a minus on your assets. So it becomes a plus and a minus. Remember, your accounting equation has to balance. What would have happened if we were using the periodic inventory system? Let's look at it. The same aspect. We have bought merchandise for cash, but now we want to implement it using the periodic stock system. With the periodic stock system, remember once again, dear learners, when you think periodic, what account comes to mind? Very correct. Purchases. That means, which account am I going to debit? I'm going to debit my purchases. All right? And remember, I told you that purchases is an expense. If this is an expense account, that means I have to come to my owner's equity and say minus. I come to my owner's equity and say minus. The next one, remember, to complete double entry, I am going to credit now my bank. I'm going to credit my bank. Remember, we're working on the assumption that bank was favorable. So I'm going to come and credit my bank. And when I credit my bank, it therefore means my assets are decreasing. Therefore, I see a minus on the assets there. All right? I know you got this one. Let's quickly go to number 2 and see how would we record number 2 on the accounting equation. bought merchandise on credit. Bought merchandise on credit. So here is another important aspect to consider. In this particular instance, we are buying our inventory on credit. Okay. Perpetual inventory system. When we buy stock, already you know which account you are going to debit. Yes, you are correct. You are going to debit your trading stock account. And already once you debit your trading stock account, it affects your assets. You are correct. So your assets are going to have an increase, a plus on the assets. And then now, in this particular instance, remember we are now buying on credit, not on cash anymore. And when we buy on credit, which account do we credit? We credit the, definitely correct, the creditor's control. And our creditor's control, you know, it is a liability. Therefore, our liabilities are going to increase. And here's an easy question. In which journal would you have recorded such a transaction? Definitely, you'd have recorded it in your creditor's journal. Credit purchases, creditor's journal. Now, this is when we use the perpetual inventory system. I want us now to go to the other inventory system, the periodic. How would we have recorded if it was the periodic? Same transaction, credit purchases. So, which account do we debit? Remember, once again, when you think periodic, what do you think? You think purchases. So, you are going to debit your purchases account. And once you debit your purchases account, remember purchases is an expense. Therefore, what is going to happen? Your honest equity is going to decrease. Your honest equity will decrease. And then which account are we going to credit? In this particular case, because it is a credit purchase, we will credit our creditors' control. Remember, creditors' control is a liability. What does that then mean? Our liabilities are going to increase. Therefore, we are going to have our accounting equation balancing. Our accounting equation is going to balance. All right, boys and girls, I want us to do a few calculations. I want us to do some calculations. Now, it says calculation of cost of sales. Calculation of cost of sales. With the perpetual inventory system, cost of sales is calculated at the point of sale. Right at the point of sale. That is where we calculate our cost of sales. That is with the perpetual inventory system. With the periodic inventory system, cost of sales is calculated at the end of the financial period. All right, you're going to see. Now, calculation for the cost of sales on the perpetual inventory system. Let us assume that our sales is 500,000. That is the sales that we're given. Okay, 500,000. And you are then given that your markup is at 60%. All right, and then you must calculate what is cost of sales. The easiest method, dear learners, is to use what we call the UK method. The UK method, which simply says what you want over what you have multiplied by what you have, it will give you what you want. Okay? Let's look at it. If we come here, you have to understand at any given time that your cost your cost is always 100%. Your cost is always 100%. But in this particular instance, they told us that our markup is 60%. That is what we're told here, which therefore means my selling price is going to be cost plus markup, which gives me 160%. Therefore, my 500,000 is the 160%. So what is it that I want? I want the cost, which is the 100. That is what I want. I want the cost. So here's what I want. This is what I want. What do I have? The have must have two values. One is a percentage and one is a rand value. So my have is the 160 as well as the 500,000. So it's going to be 100, what I want, over what I have, which is 160 as a percentage, but then the rand value of the 160 is your 500,000. It would then give you your cost of sales, which is 312,500. Remember, this method is very, very important. What you want over what you have times what you have will give you what you want. And please remember that your cost is always 100%, but then your markup varies depending upon what the examiner wants. In this particular instance, the markup is at 60%, which then gives you your selling price to be 160. Okay, let us look now at the steps of calculating cost of sales on the periodic inventory system. All right, now the first thing that you're gonna need is your opening stock, value. So this is the stock that you have right at the beginning of the financial year. All right, your opening stock. And then you are going to add to it your purchases. Okay, you're going to add to it your purchases. Remember, in this particular instance, we're dealing with our periodic inventory system. You're going to come now and say, I'm going to add my purchases. After adding your purchases, you have to as well add your carriage on purchases when the examiner has provided them in the question. So you add your carriage. Do not forget to add as well your import duties. After adding your import duties now, you have to now subtract. You subtract your closing stock. This then gives you your cost of sales using the periodic inventory system. Okay, already you can see now the main difference between the perpetual and the periodic. You can see the two main differences between the periodic and the perpetual. This is what we had to go through for the periodic inventory system. Now, how do we get gross profit? Is the next question. Okay, how do we get gross profit? All right, gross profit is a simple calculation. Okay, you should remember this even from your grade 10, that for you to get gross profit, you say sales, then you subtract your cost of sales. It should give you an amount for gross profit. I know most of you guys know this one. Okay, if this comes in an exam, this is a cause for celebration, really. All right, now, dear learners, I want us now to quickly take a very, very short break, and then we're going to continue. We're just going to take a 1 minute break, and then we are going to continue.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, dear learners. Let us continue. I want now to continue and show you how to calculate your gross profit using the perpetual inventory system. Okay, so what you have there on your screen is a simple trading account. All right, on your trading account, on your credit side, you see we have our sales. On the credit side, we have our sales. And then on your debit side, you are going to have your cost of sales. We already know now how to calculate cost of sales. So you're going to have your cost of sales. And then you know how to close off a ledger account, the side with the highest amount. So you're going to have the same totals here, the same totals. And then you are going to then get your profit. That is your gross profit. But remember, the gross profit is transferred to the profit and loss account. The gross profit is transferred to the profit and loss account. So it is very easy for you now when you are in an exam and you want to calculate for your gross profit. Simply remember, it is your sales and then you subtract your cost of sales. Okay, come with me. I want to show you now how would you calculate it if we were using the periodic inventory system. The periodic inventory system. All right. Now, the first thing that we begin with is our sales. Here is your sales. Okay? You must have your sales. And then you are going to credit your sales. And then on the debit side now of your trading account, you are going to have your purchases. All right? Remember the goods that we're buying. Remember we did both cash as well as credit purchases. So you're going to come here and have your purchases. In the same account on the debit side, you will then bring in your carriage on purchases. So your carriage on purchases will also come to the debit side. That is very important. Remember, what we want to do is to calculate our gross profit. And remember, you also must bring into consideration your customs duty. We spoke about it several times today. Your customs duty. And then your customs duty, you will also debit them in your trading account. Now, you will realize that you have something now that will be left on the list of information. That is your closing stock, the stock on hand at the end of the financial period. What do you do with that? All right. Now, with that closing stock, you will credit it in your trading account. You credit it, and then we apply again the very same principles of closing a ledger account. So you look for the side with the highest amount, and then the difference becomes your profit. The difference becomes your profit. All right. Now, us now in the next few minutes. There's a colleague of mine who's going to come and he's going to take you through further calculations. But before he does that, I just want to take you through one simple example. We're going to do example number 1, and it says, use the following information to calculate the cost of sales for the year ended 20th February 2021. All right, and then the good thing about this is that all the information has been provided. So let us now see how would I calculate my cost of sales. And already you can see that we are using the periodic inventory system. All right, let us now go and see on my solution. The first thing that I start with is my opening stock, which is 60,000. And then I have to go and add now my purchases. And my purchases is 450,000. All this I am adding, and you see I'm saying plus. And I will also add carriage of 20,000. And please remember to also add customs duty of 5,000. Having added all of these, you then arrive at 525,000. I still have to come and subtract my closing stock. And then I subtract my closing stock of 35,000. When I've subtracted my closing stock of 35,000, I will then get my 490,000, which becomes my cost of sales. Now, it is important, boys and girls, that you understand this format. You understand what comes first, your opening stock. You bring in your purchases, your carriage, your customs duty, and then lastly, you subtract the closing stock. Once you have done that, it automatically then gives you cost of sales using the periodic inventory system. Boys and girls, I want you to remember this, because most at times when the examiner brings this in the exam, they would want you to do exactly as we have shown here. Before I leave you and introduce the next presenter, my colleague, I want you to know that in this particular activity, our creditors allowances were already deducted from the purchases, and the difference would be your net purchases. That is very, very important. Boys and girls, I hope you have benefited so much from this lesson. I want you to stay tuned, because my colleague is coming and is going to show you more calculations and his various ways and very interesting methods that Mr. Peter is going to show you in how to calculate amounts on inventory system. And please remember to stay tuned. Thank you so much for watching and for joining. Please stay tuned for my colleague who's going to come in right now. Thank you.
Welcome, grade 11s. Thank you so much for joining us again. Just had a lesson with Mr. Simbi, my colleague, and Mr. P. Peter. I'm going to continue from where Mr. Simbi left. So there are a few takeaways from his lesson, which were very interesting. He did mention how you calculate gross profit. He mentioned that you need to have your sales, and then you subtract your cost of sales. And he also went all the way to explain the difference between the inventory systems. He did explain the periodic inventory system as well as the perpetual inventory system. One thing that is interesting from his presentation is that whenever you are to talk periodic, there is an account that you should always remember, and that account is the purchases account. And wherever you are to do perpetual inventory system, there is another account which always should be remembered, and that account is the trading stock. Those two accounts are used to record the movement of inventory. And after that, he also did calculate the cost of sales. Actually gave you a format, a frame, which you should always remember. And this frame emphasizes that we should identify the opening stock, and we add the purchases, carriage on purchases, and customs duty. Those, when they're added together, they will give you the value of stock available for sale. And once you've got that good learners, as he has said, you will then subtract your closing stock, and that will give you your cost of sales. That frame is the point of departure when it comes to calculations we are going to be doing in this particular part of your syllabus. And I want you to listen attentively. This frame is very, very important, because whenever examiners decide to bring anything that has to do with calculations around this, they will always want you to think about this frame. They may ask you to calculate any figure in the examination. You may be asked to calculate the purchases. You may be asked to calculate the carriage on purchases. You may be asked to calculate the customs duty, or you may be asked to calculate the cost of sales. And you can play around with those figures. And in this lesson that I'm going to be doing with you, I'll be teaching you how we calculate any of those components in the examination. And I want you to relax. Whenever people think of calculations, there's always that phobia. Accounting is very easy, interesting. As we have seen Mr. Simbi presenting, he made it a joy. So I'm going to move slowly, take you along, and I want you to enjoy this lesson. Now, let's move on to the next part of the lesson. Like I indicated, you will notice that the examiner may play with your mind. Instead of them asking you to do the cost of sales, they may say to you, what if purchases are not given? You saw in that calculation that you did with Mr. Simbi, you were doing the cost of sales. How about in a situation where you're not given the purchases? Are you going to walk out of the examination and say, the purchases were not given? We are going to give you the trick now. Now, if you remember the frame, you can calculate anything. All you need to do is to follow the steps that I'm going to give you. There's a method which you're going to apply, which is called the bottom-up method. Once you have got the frame, which indicated to you that you are having cost of sales at the bottom, and from the cost of sales at the bottom, you had the closing stock. And then from the closing stock, you had a figure which we normally call the stock available for sale. And then you have got your normal customs duty, you've got your normal carriage, and then you've got your normal purchases, and then you've got your opening stock at the top. So I've reversed Mr. Simbi's presentation. And once you have done so, you can then figure out any missing figure which you are expected. Now let's look at how this is going to happen. There we go. From the figures that we have what our opening stock. And the figure that I have highlighted in deep gray there is the missing figure. Now, if you look at the 67,000 at the bottom is our cost of sales, and then we've got our closing stock. And if you reverse those two figures, add them upwards, you're going to say 67,000 rands, take it slowly, Put that in your calculator, 67,000 rands, and watch out there, 40,000. That 40,000 rands is in bracket. Those brackets are only going to apply if we are working it downwards. In this instance, when we are calculating a figure missing on the top, we actually reverse. What do we mean by reversing? Instead of using the brackets, boys and girls, we are actually going to add. So 67,000, those brackets becomes plus 67 plus 40, it gives you 107,000 rands. And then there's a missing figure there, that one there, that 87,000 rands is not given. That's what we are calculating. If we have got 107,000 rands and we have got an opening stock of 20,000 at the top, that missing figure there can easily be calculated by reversing the sign of the opening stock. What do we mean by that? 107,000 in your calculators, boys and girls, minus 20,000 rands. It will then give us that 87,000 rands. So it is as simple as that. I can see some of you, they already got it right. You can give yourself your pet there because you are working your way into getting a distinction in accounting. So that's the basic way of calculating a missing figure using the frame that Mr. Simbi gave us today. Remember with Mr. Simbi, you did calculate the cost of sales. He mentioned that you get your opening stock, you put your purchases. If carriage on purchases are given, you also put them there. You also then put your custom duty if your business is importing purchases. And then once you have got that, this 107 here gives you the amount of stock available for sale. And then you subtract from that your closing stock, and then it gives cost of sales. It is always easy when you are going forward. And when you are going backwards, because you're not used to it, we always find it a bit dicey. But I want to assure you this today. This is easy. All you should think in the examination is to reverse the signs. Thank you so much. Let's move on. Right. There is an explanation there. It's given then, highlighted there in red, bottom-up method. 67,000 plus 40,000 minus 20, it gives you 87,000. And the emphasis, boys and girls, is that you must change the signs. What signs are we talking about? We are talking about that bracket. It falls off now, it becomes a plus. What else are we talking about? The 20,000 rands, which is not in bracket, signifies that it's positive. Then when you are reversing, it implies you are going to subtract that so that you arrive at that 87,000 rands. The same technique, the same skill we have applied here can be used to calculate anything missing depending on the question. At some point, they may want you to find the figure of the opening stock. They may want you to find the figure of the closing stock. They may want you to find the figure of your carriage on purchases if they are given. They may also want you to calculate the custom duty if that is given too. And you will apply just but the same method. I'm glad I can visualize some of you there playing around with calculators already and even asking what if questions and arriving at those missing figures, which is very good. Excellent. Now, note the sign for the cost of sale will not change. That's very, very crucial. The sign for the cost of sale will not change. So everything else, the sign changes, but that of cost of sales will not change, which means it will always remain positive. So remember that, boys and girls. If you remember that, you are going to be working with all the marks from any paper you're going to be sitting in any examination. Good. Now let us look at an exciting activity. We're talking business now. We have got business A. We are given a scenario there. But maybe before I get to explain that, I want us to go back slightly to the first slide. Right. Right, on the slide that we are going to move into, you will notice that we are given some two items, and those two items are not going to be used in our calculation. Let me go to that slide quickly. Here we go, boys and girls. Thank you so much. Now, if you look at that slide there, it has got two items which you must always check because they are
Excellent.
not part and parcel of the calculation.
Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
You have been given power to decide whether you want good results in your life, in your schoolwork, or you want bad results. As Tony Robbins said, it is in the moment of your decision that your destiny is shaped. And your destiny is shaped right now with the decisions that you are currently making in your schoolwork. So decide whether you want to be an A student and start working on it, because there is power inside of you. The infinite power is inside of you, and the time you decide to tap in that power, you will become who you want to become in your schoolwork.
Boys and girls, that's the slide that I was talking about here. If you look at these slides, it gives you your credit cells, it gives you your credit on cells. Those two items, they've just been thrown into the mix there. And you need to be very careful, ladies and gentlemen. Because if you just take any figure there and put, it distorts the frame that Mr. Simbi gave you. Remember that frame. It talks of opening stock. It talks of purchases, carriage on purchases, custom duty. You add all those and then you subtract your closing stock. If ever you get to put your carriage on sales, then that distorts the calculation there. Carriage on sales are actually a period cost which will be reflected when you are calculating your profit. So when you're doing your profit and loss, that's why you're going to reflect that. So do not mix up your carriage on sales and your carriage on purchases. So that's the trap. Watch out on that. Don't fall for it in the examination. Now let us move on. Activity 1, we're talking business. Information, the information is taken from records of 3 separate businesses. We're going to start off with the first one, which is A. So we have got business A, we have got business B, we have got business C. So we are going to start off with the first business, which is business A. Calculate the unknown amounts and percentages on 28 February 2021. Another thing which is very crucial, boys and girls, when you are doing accounting, always be mindful of the financial year end. You must look at that all the time. If it takes you highlighting it, do so, because all calculations are going to be based on the financial year end. For you to be able to identify which figure is opening stock, you will derive that from your understanding of the financial year end. For you to be able to identify the closing stock, you will also be able to do so only because of the financial year end. In this instance, I will highlight this one. The financial year end is 28 February 2021. So what does that mean? It means that already in your mind, you must know that your closing stock must fall there. And then you reverse 12 months backwards to establish your opening stock. Let's get into the calculations. Balances and totals 29 February 2021. Opening stock is 60,000 rands. Purchases is A. What do they mean there? They want us to calculate. They think they are clever. But you are more cleverer. Remember, we have already shown you how to shoot that down. We said it's bottom-up method. You reverse your calculations. You change your signs. And remember, as you change your signs, your cost of sales won't change the sign. Let's get to look at it again. We have got your carriage on purchases. Do we include carriage on purchases? Yes, because it affects the cost of bringing stock into a sellable condition. When we buy stock as a business, we transport it to a point we are going to sell it. So the price of that stock will be affected by that carriage. But if we are to think of carriage on sales, it doesn't affect that. So you won't edit that one there. But this one, yes, it is supposed to be added. And then once we've got all those added up, they give you cost of goods available for sale. And that's 198,000 rands. It's interesting, boys and girls. Easy as ABC. Let us go over it together. We said we reverse. We will start with 198,000 rands there. And what are we doing? We are reversing. We'll subtract our 8,000 rands because originally it's positive. What are we going to do with our opening stock? We are also going to subtract that because it was originally positive. So once again, into your calculator, boys and girls, it's 198,000. Next entry in your calculator, minus 8,000 rands. And lastly, you are going to subtract your 60,000 rands. I can see clever learners there. Right? That calculation quickly. Once you have done so, that will give you your purchases, which is going to be your A. Right. Let's move on before we put our A there. I want to give people time to work it out before I say out the secret. Let's go on to our B. Less closing stock, 55,000 rands. And then we have got our cost of sales. That one, I guess, it's an easy one. Remember, you are going downwards. You are not reversing. So if you are going downwards, you are going to subtract that one as usual. So this closing stock is in brackets, and that will give you your cost of sales. Let me go over it again. I know someone might have been trying to figure it on their calculator there. We are going to go to our A there. 198,000 rands minus 8,000 rands and minus 60,000 rands. My calculator tells me I'm supposed to have 130,000 rands. So boys and girls, that's very, very easy. As an individual there, on your calculator, I want you to go over it again Remember, in accounting, you can only master calculations through practice. Right. Our opening stock there is given 55,000, and you're going downwards, you're going to subtract that to arrive at your cost of sales. Into your calculator once again. Maybe we can add this one to work this one together. This is going to give us a 0. This one is going to give us a 0. This one will give us a 0. And this is going to be 3. And then this is going to give us a 4. And this is going to give us 143,000. So it is as simple as that. Now let's get on to the next part. You are now given your gross profit. Remember, Mr. Simbi emphasized the calculation of gross profit. I'll keep on going back to that because it is principles that makes a learner good in accounting. He mentioned that for you to arrive at gross profit, you will need your sales. And once you've got your sales, you subtract your cost of sales. Now we see here, our gross profit is given. Our cost of sales, we did calculate that. It's 143,000. So if you were to be asked to calculate this, we're going to say sales minus cost of sales, then we're going to arrive at gross profit. This information you are given on this table is not a format. It is just but a presentation of figures. And once you have got the principles, I urge you to play around with these figures. Calculate anything from your mind, create scenarios, tell yourself purchases are missing, calculate them, tell yourself carry-on purchases are missing, do them until you internalize how these calculations are done. Now let us quickly go on to our sales. And then you have got a gross profit on sales, on cost of sales, and this one is going to be our C. This is what it says it is, gross profit on cost of sales. So you will need to have your GP, which is your gross profit. You then divide that by cost of sales. You multiply this by 100 over 1. Why multiply by 100 over 1? We want to convert this into a percentage. We are expressing the result of this calculation out of 100. So it's going to be gross profit over cost of sales. You multiply that by 100 over 1. Do not be scared of the legal math in this. It is basic, it is simple, and I know we have got very clever grade 11 learners, and this is easy. And the added advantage is that your papers now have got the formula sheet. If you are in the examination and you can't figure out the formula, you can always refer to that formula sheet. That's the purpose of the formula sheet at the back of your question paper. Always remember that. Now, let's look at the gross profit on cost of sales. Our gross profit is given as 71,500, and you are going to divide this by 143,000 and multiply by 100 over 1. And this is going to give us 50%. Good. I can see the calculations there on your calculators. I can see people are following through, and it's interesting to see so much interest from the learners. Now let's get on to the second business. Remember, I told you from the beginning that our activity has got 3 businesses. Business A, business B, and business C. And as a point of departure, always remember to look at the financial year end, because that speaks to how you're going to do your calculations. For instance, if you were to figure out what your closing stock is, in most questions, it will be shown by the date in bracket. And if you do not know the financial year end, you may misplace your closing stock as well as your opening stock. Now let's get to look at the calculation. This one is easy. I'll state the calculation, how it is done, and move on to the next thing because it's a repetition of what we have done in activity, in the business A. We have got our opening stock there, boys and girls. It's given, no need to calculate it. We have got our purchases. We have got our carriage on purchases. This takes us right back to Mr. Simbi's principle of calculating cost of sales. He has mentioned that you have got your opening stock at the beginning, you have got your purchases, you have got your carriage on purchases, and this business B does not import, so we don't have custom duty or import duty. It is only those three which you are going to add so that we arrive at the cost of goods available for sale. And then once we have got that, we then can go on to calculate our closing stock. And this now, you need to work backwards. This here, the arrow will move like this, but for this one here, the arrow goes up. I'm interested in that principle. I know as clever students, as clever learners in grade 11, you all can put those figures in your calculator. But what is the missing point now is the principle. When you are calculating a figure that is at the bottom other figures, you do the normal. It's normal format. Opening stock plus purchases plus carriage on purchases, then you arrive at your D, which is your cost of goods available for sale. But look at this one. This now falls at the bottom there, that closing stock. So now, how we're going to work this one, you take your cost of sales, and remember we said your cost of sales will never change its sign. It is always going to remain as positive. It's plus. So 135,000 minus your cost of goods available for sale, and that will give you your closing stock. Right, let's move on to your gross profit. It's given as 54,200, and once you know that the figure you are calculating falls at the bottom, look at the movement now. It is going downwards, so which means you do the normal. So 135,000 plus your 54,000, which is your gross profit, you will then arrive at your sales. Now, I want us to also remember that the net sales are also loosely referred to as turnover. Why do I mention that? It is because when we do indicators, they always love using the word turnover instead of sales. If you go to the bottom of this question, you will notice that we have got gross profit on turnover. Do not get scared of these small words. That turnover is the equivalent of sales, which we already would have calculated in F there. And once you have got that, you're going to have your gross profit over your turnover or sales, multiply this by 100 over 1. And this will give you your G. And that will be your gross profit on turnover. I will, at the end of this, show you the cleaner calculation so that those of you who may have missed a step here, you can always refer back as you revise. Remember, it's a revision, practice, and practice that makes a difference in accounting. Now let's get on to C. C is interesting, simple though. The information is taken from the records of these separate business calculated the unknown. Now, if you look at this, you have got your 48,000, which is opening stock. You have got your purchases. You get a carriage on purchases. And this is what we are calculating. And remember, you are calculating, it's reversed, it goes up, the arrow points up. What does that mean? It means after adding these two, you're going to subtract them from this 169 to arrive at H. Boys and girls, business C's calculations are just but similar to those of business B. I don't want to bore you with one thing. I'll leave the calculation of I, J, K, and L because we are still calculating gross profit on turnover, which is just but the same. Let us move on to your suggested solutions there. We leave it there so that you can always fall back on this and do the calculations on your own and compare with this. Right. I want us to look at this part. Very interesting. I've just left the calculation for a while. I know a lot of us think that accounting is all about calculations. No, it's not about calculations all the time. We need always to think ethics. We need always to think internal controls. And once we do accounting with that mindset, accounting will be very exciting. When we talk inventory, we are looking at an asset that is very, very valuable. A business has invested some money into that asset, and we must safeguard it. And when we talk of safeguarding an asset of a business, we are talking of internal controls. These are accounting things we put in place to safeguard the assets. And let us see how we can safeguard this valuable asset known as inventory. The first thing that you need to do, I know most of you are going to be entrepreneurs before long. We want people who create employment. And this is what you're going to do to your inventory. The inventory must be kept safe and secure, in a secure place. Always ensure that it's under lock. You don't want to lose your stock. So put it in a safe and secure place. What else would you do? The movement of inventory items must be recorded properly. One very important feature of an accountant is the ability to keep traceable records. And that is pertinent when it comes to maintaining inventory. You need to always keep proper records. And this is very important. Mr. Simbi alluded to it, that under periodic inventory system, the value of stock is not normally readily available. The cost of sales has to be calculated after physical stock count is done. And that's why you will see this as an internal control, that physical stock count must be done more regularly. If you just let your stock remain in the storeroom without checking on it, there is a likelihood of it being stolen, and that which has been stolen needs to be traced when there's still enough evidence. So the physical count must be done more regularly. And then the next thing that you need to do to ensure that your inventory is safe, must not buy excessive stock to avoid high storage costs and inventory handling risks. Remember, you must buy enough. It must be just but enough. If you need stock for a particular month, that stock must be able to cover that particular month only. If you buy stock that lie idly for too long a time, there is a risk that some of it may be stolen, some of it may go bad, some of it may deteriorate, and some changes in the market may have a situation whereby it becomes difficult for you to sell that stock in the future. So it is very pertinent that you know the stock levels. It must just but enough to meet the demand. And the storage costs, if you keep too much stock, you end up paying more for keeping that stock. This includes even the insurance that you'll pay for keeping the stock. So it is very crucial that you just buy enough. Now, this is the cornerstone of all internal control procedures. the issue of separation of duties. I will explain a bit of this because it cuts across the syllabus. Whenever you're talking of any asset, you always see separation of duties popping up. What does this mean? It means that when you assign duties to people who are going to be handling stock, let it not be one individual. There must be check and balances. One person must accept the stock when it's being delivered. One person must record it. Another person must pack it where you are keeping it, maybe it's in the storeroom. And when you are releasing it as well for sale, there must be a dispatching someone who's going to do the records. So at the end of the day, we don't have one person doing everything, because that will be a good way of letting someone cook the books. So to avoid that, you need to have that balance. Let more than one person do that, maybe 2 or 3 people to handle the processes on stock. At the end of the day, you'll have more than one record. And those records can be compared. And when you compare those records, we then can pick some differences. And those differences will then indicate a problem on how we are handling our stock. So separation of duties, boys and girls, that's very, very crucial. Let me recap on this. Internal controls. First one is your inventory must be kept in a safe and secure place. Movement of inventory items must be recorded properly. The third one, very crucial, linked so much to the periodic inventory system, physical stock count must be done more regularly. I guess you have often gone to the mall, you get to see one shop closed, and there's a message to the effect that we are sorry for the inconvenience. We are currently conducting stock take. And at times it gives even some students at university or even at high school some holiday work because they engage them to do that physical stock count. So that is a way of internal controlling inventory. And then next one, must not order excessive stock. Manage your levels. It mustn't be too much. It mustn't be less than the demand. And then lastly, separation of duties. Right. Boys and girls, this topic which we have just done today is a run-to-the-mill type of a topic. It's an easy one with the practice. If you can remember what Mr. Simbi said when he distinguished between periodic inventory system and perpetual inventory system. Once you are able to tell the difference between the two, then you will see how it will affect your calculation of cost of sales. Remember, each inventory system gives us the figures we need to calculate cost of sales. For your perpetual, the cost of sales are readily available because you can determine them at a point of sale. But with the periodic inventory system, you can only get to know the figure for your stock after doing your physical count. And once you have understood that, the second thing that you should always remember is the accounts that are peculiar to each system. If we are talking periodic, Mr. Simbi rightfully pointed that you are going to see the purchases account, and that is an expense account. If we are talking perpetual, you will then give an account which is called your trading stock, and that is your asset. Once you understand the asset and the expense, you will then know the effect of those when you are doing the accounting equation. And it also will affect your understanding of your double entry when you are doing those two accounts. You must always know your purchases will decrease on your left-hand side, which is your debit. Same applies to your stock. Good. Right.